This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report with Scott Norse.
Good afternoon, traders. I'm Scott Norse here with today's Forex Report. Today's Wednesday, June 13th, 2007. The dollar again rallied in the overnight session as investors grow increasingly confident in the health of the U.S. economy and the prospect for higher rates. Yields on treasuries continue to push higher as traders sell bonds in anticipation of a possible rate hike by the Fed later this year. Such lofty expectations had the greenback underpinned as we headed into this week's first big release, retail sales. While the headline and ex-auto readings both doubled economists' expectations at 1.4 and 1.3%, we immediately searched for an ex-gasoline figure to determine whether record fuel prices were inflating the numbers. As it turns out, sales were still up a whopping 1.2% when record-high-priced gasoline was taken out. This is an indication that even with housing still in a slump and gas prices surging, the U.S. consumer is not afraid to visit the mall and spend some money. With consumer spending accounting for more than two-thirds of GDP, this is a positive sign for a rebounding economy. Ironically, the dollar found only a few seconds of strength on today's retail sales before selling off a bit in the broad market. The second big release today was the Fed's Beige Book, which is a summary of current economic conditions reported by the Federal Reserve districts. These reports are published 8 times a year, about 2 weeks prior to each scheduled FOMC rate decision. Today's report was rather dull, pointing out that hiring and manufacturing had picked up in several districts, but that wage pressures hadn't increased. Furthermore, the Fed noted that most areas did not see a rise in overall price pressures. The one question it raises is whether the Fed is still hawkish enough to warrant the recent turn in sentiment among traders and economists regarding rates. We believe that Fed funds futures are priced appropriately now, indicating no change in rates either way for the remainder of 2007. However, some firms are already making calls for hikes. This only adds to the excitement on inflation data due over the next couple of days. Till then, have a wonderful night trading. Take care.